Okay, recording this video after close of trade Thursday 17th of February 2011. Hope your trading went well today. Closed up at 37.75, 1.4 million contracts traded. Kind of range day up today, and they're my bet noir. I find them very difficult to trade, and today was no exception. I'll show you the trades I should have taken on my intraday charts. They were kind of nice, but you know, psychologically for me, they're my most difficult kind of days to trade. I'm far better in kind of range days than trending days up, particularly up days, because you know I don't believe in this market at the moment. Let me just show you this daily chart here. You know, we've had some little kind of pullbacks along the way, professional down bars here, and we bounced from all of those. Now we're kind of making, you know, almost like the inverse type situation here. We're kind of making new highs on very light volume and kind of Rambo patterns here, potential reversals of amateur breakouts, no demand patterns here. We had a similar sequence back here around Christmas, New Year that I talked about. I thought that was, you know, all over Red Rover, and of course no, we just continue to power to new highs. The concern that I have, and I'm a bit of a broken record on this, is like the market should breathe. It should breathe in, it should breathe out, and we should have healthy little retracements along the way. What we've got at the moment is we're making kind of higher and higher new highs all the time on less and less volume, and that's like breathing out all of the time. Eventually you run out of puff, and that's what I see. But calling when that reversal is going to happen is, you know, has been for me a fruitless exercise. So, you know, I'm not going to belabor the point, but just to say, you know, it's not healthy what's going on at the moment. I'd much rather see kind of healthy little corrections getting in and continuing to make new highs. That having been said, let me just show you what I was looking at today, what the intraday charts kind of looked like. This is the 4500 tip bar chart. This is today's activity here, and you can see the close of yesterday and the open of today, Thursday. And we consolidated underneath this resistance level here, cyclical resistance level. We had blue kind of professional bars kind of at the highs. We had bearish divergence and so on. But if you look at better momentum here, you can see we've basically flatlined on better momentum, which shows real balance in terms of the buying and selling activity. And from there, we often get kind of trend breakout moves. Now, I was hoping for the downside break, obviously. It went the other way, and you can see we kind of went to 1340 and a strong move up, exhaustion buying on the way up, and then we had a couple of bearish divergence signals into the highs, and we kind of sold off a little bit into the close. But what I want to talk about is this kind of pattern on the 1500 tip bar chart that was evident at the highs today. I really like end of trend warning signals on the 1500 tip bar chart because that's a high time frame relatively for day trading, and when you see end of trend warning signals, they kind of tend to work out into reversal moves. Now, in the previous day we had one, and it was a doozy. So this is on the Wednesday, beginning of the day. We had a kind of a correction down to new lows, Rambo pattern down here, and a flush signal, and we took off to the upside. And you see kind of going into this end of trend warning signal, we had professional blue bars, you know, hitting the highs. We'd already had our exhaustion buying, and then we had bearish divergence signals here hitting the end of trend warning signal, and how that corrected really nicely for a nice 10-point move to the downside. It ended when we get professionals kind of coming back into the market here, bullish divergence signal down here. We'd pushed past our end of trend warning signal here, but on the lower time frame, the 500 tip bar chart, there was an end of trend warning signal actually at this turning point here, and then we kind of reversed, went the other way. Now, what's the difference between, there's two differences between this end of trend warning signal on the 1500 tip bar chart and the one that we saw today. The first one is that this end of trend warning signal happened about 10 a.m. and that gives the market an opportunity to correct the other way. If we get kind of reversal signals setting up later in the day, particularly when we've had a trend move up, they tend to end on the extremes and just kind of keep on going into the close. A signal like this for a reversal trade happening kind of mid-morning is kind of a great place to be able to hook into a trend move in the opposite direction. If we get that signal kind of late in the day, we're unlikely to see a big enough move to make it kind of worth our while. The other difference here is that we had the exhaustion signals, the exhaustion buying before the end of trend warning signal here. So when we were making that end of trend warning signal here, it was on weaker and weaker buying at this point. So this was a really weak kind of buying. It was a strong signal because the buying was weak, if you like, and so that's why this market kind of was able to reverse. So two things: it happened early in the day, and there was kind of weak buying happening at the highs, and so we did reverse. If we look at the trade today, we had coming into this end of trend warning signal here. This is when we got our exhaustion signal. We did get one kind of earlier in the day as we were kind of making this breakout, but as this end of trend was being signaled here, that signal went off straight away. It just happens as soon as the next bar kind of signals that high. So we knew that there was still some exhaustion buying and that we hadn't seen the bearish divergence. In those cases, kind of waiting for the second cyclical turn after end of trend is usually kind of a good place. So you can see by the time we got the second cyclical turn here, the buying was a lot weaker with bearish divergence kind of coming in here. However, this kind of move, this end of trend warning signal was happening at midday, and the second cyclical turn was happening at 2:30 in the afternoon. So we didn't get enough time for this kind of to break down and go into a reversal trade. So kind of two types of differences, and I was trying to take this signal here, and so I'm looking at this in kind of in retrospect and looking back and kind of seeing what did I do wrong. In terms of I didn't get taken out at my stop, but for me it was a 2-point losing trade, and it wasn't good trading on my part. And one of my rules of thumb is that when we get trend days, they'll close at the extremes, and you don't want to be trying to take reversal trades. The other kind of rule of thumb is that you don't get more than 2 trends during a day, and we don't have enough time to get this kind of second trending move going by that late in the afternoon. So there we go. That's what I'm kind of doing at the end of the day, trying to look at my charts, seeing where did I go wrong, and just remind myself about kind of these obvious points, kind of rules of thumb. Talk about them enough in some of the videos and articles, but sometimes in the heat of battle, it's difficult to remember those things. So I'm sure everybody kind of understands that. So hope your trading went well today, and I'll post something tomorrow.